Growth feels great until your back office snaps under the weight. When operations expand, the foundation supporting your business starts to buckle. You see it in the daily operations. Payroll gets complicated, WPS validations drag on, and VAT entries require constant manual reconciliation. Meanwhile, your multi-warehouse inventory sits completely disconnected in a spreadsheet blind spot. The true limit arrives at month end. If closing financial books means management chasing department heads for scattered spreadsheets, your operational structure is failing. To see if you've hit that limit, look at this tipping point scorecard. If WPS delays, VAT anxiety, inventory blind spots, and project leakage are all flashing red, it's time for an audit. Operating this way means you don't actually have control over your business. You are surviving on a network of fragile workarounds. The standard advice given to growing businesses in Abu Dhabi is to simply go out and buy an ERP system to fix these scaling issues. But the reality is harsh. Across the Middle East, enterprise software implementations suffer massive failure rates. The primary driver of that failure is internal cultural resistance to centralized data. Buyers assume an ERP is just a piece of software you install on a server. In practice, a successful ERP requires a complete enforced operating structure for the entire company. Look at this diagram. If you purchase a system without redesigning your internal workflows, you are just taking your chaotic, disjointed processes and trapping them inside a rigid software box. If you refuse to standardize how your business runs before migrating, you are simply paying a premium to digitize your current confusion. Most owners start their ERP search by asking department heads for a wish list of familiar software features. That is a critical mistake. The necessary alternative is conducting a harsh internal business audit. You have to focus exclusively on locating exactly where current work breaks down, gets delayed, or requires duplicate entry. This process guarantees political friction. Department heads naturally resist centralization because they want to protect their own private spreadsheets, vendor contacts, and personal reporting logic. This chart outlines the trade-off of a rigorous audit. You demand high input through intense internal process scrutiny and accept the hidden trade-off of cultural friction to achieve the outcome of a clear, vendor-agnostic blueprint. The true output of this exercise isn't a software requirements list. It is a detailed map exposing your organizational bottlenecks and exactly where accountability is missing. In the GCC, the regulatory environment is strict and non-negotiable. Workflows for WPS payroll and FTA mandates for VAT and e-invoicing must be exact. Globally branded ERP platforms often struggle here. They tend to treat these local compliance mandates as disconnected, customized add-ons rather than core functions of the software. Locally developed systems like Hinawi offer a clear architectural advantage. A central financial database organically integrates native nodes for WPS payroll, FTA VAT, and bilingual interfaces. These unified nodes pulse cleanly together, immediately ensuring regulatory safety and bottleneck-free navigation. The main trade-off becomes obvious on this scale. You are bypassing a sleek, highly modern global interface in favor of a pragmatically designed, region-specific workhorse. If you prioritize a flashy interface over native local compliance, you directly sabotage both your company's legal standing and your team's operational speed. Once you know what system you need, you face a major structural dilemma: choosing between a cloud deployment and on-premise architecture. A cloud deployment is ideal for companies running standard workflows across distributed branches, especially if management wants to lower their internal IT burden. However, on-premise architecture is essentially mandatory for highly specialized sectors like contracting or manufacturing. These businesses require deep configuration, heavy data control, and highly specific workflow rules. Regardless of where the software sits, every project eventually hits the most underestimated and fatal phase of implementation: historical data migration. There is a massive temptation to save time by dumping all your historical data directly into the new environment. But your data must be forced through a strict, multi-layered filter before it enters the new reservoir. Management must step in and force department heads to painstakingly clean, deduplicate, and audit all master records, customers, inventory, and assets before authorizing the move. This matrix shows the migration reality. The input required is pristine data cleanup. You accept the hidden trade-off of a delayed implementation timeline to secure the outcome of a single, reliable source of truth. Bad master files create bad ERP results. Migrating dirty data turns your new software into an expensive storage unit for old mistakes, guaranteeing failure from day one. Buying the software license is easy. Securing an implementation partner who actually understands local Abu Dhabi operations is incredibly difficult. A strong vendor provides localized hypercare and leads role-based operational training. During the transition, they act as process disciplinarians rather than just salespeople. You have to evaluate proposals based on total cost of ownership. The software license is rarely your primary expense. This pie chart details the true cost breakdown. The software license is just one piece. The rest is consumed by infrastructure setups, process adjustments, and extensive post-go-live training. Choosing a partner based on the cheapest proposal, especially one promising a fast, easy transfer, is a direct path to weak support, poor training, and eventual project collapse. Look at this chart comparing process complexity against the scale of change management. For rapid growth SMEs with standard needs, you sit in the low complexity quadrant. Your path is a cloud deployment running strict standard workflows. These businesses must avoid heavy customization by adhering to out-of-the-box rules. However, complex local operators facing heavy regional compliance sit in the high complexity quadrant. Your path requires a locally developed ERP, deployed on-premise or hybrid. Ultimately, centralization is a management decision, not a software feature. Do not authorize an ERP purchase until leadership is fully prepared to enforce the operational discipline required to make it work.